Hello, my name is Jason Mercer, the Toronto Real Estate Board's Director of Market Analysis. We are now more than halfway through 2016. It makes sense to provide an update as to the state of the residential real estate market in the Greater Toronto Area, especially as it relates to transactions reported through TREB's MLS system, as well as what we should expect to see for the remainder of the year. So through 2016, TREB Realtor members reported slightly more than 70,000 home sales, including single and semi-detached houses, townhouses, and condominium apartments. This result represented a 9% increase compared to the first 7 months of 2015. Year-to-date sales were up for all major home types for the TREB market area as a whole. With this in mind, we remain on track for a second consecutive record year of sales. The current forecast is for 110,500 sales to be reported in calendar year 2016, representing an annual increase of 9% compared to just over 101,000 sales in 2015. Now, the demand for ownership housing that we are experiencing in the Greater Toronto Area is fundamentally sound. The GTA economy is outperforming relative to other metropolitan areas across the country. Look, for example, at the employment trend for the census metropolitan area of Toronto. It has been outperforming the rest of the Canadian economy since 2012. Over the same period, we have also seen the unemployment rate trend lower. As a result, average income growth has accelerated above the rate of inflation over the past year. Positive regional economic conditions in the GTA, coupled with the continuation of low borrowing costs through the end of 2017, suggest that households will remain confident in ownership housing as a long-term investment. Demand will not be the issue. We knew this at the outset of the year when an Ipsos survey completed for TREB found that 3 in 10 households in the GTA were very likely or somewhat likely to purchase a home in 2016. On top of this, the survey results suggested that the great majority of households also wanted to purchase some form of low-rise housing, a single, a semi, or a townhouse. And herein lies the problem. The supply of low-rise listings on TREB's MLS system, and to a lesser degree condominium apartment listings as well over the past year, have been very constrained. While we reported 70,000 sales through the end of July, we only listed 99,000 properties over the same period in TREB's primary market area. So this points to a sales to new listings ratio of 71%, extremely high from an historic perspective. This means that there has been intense competition between buyers in many neighborhoods throughout the GTA, and this has led to strong upward pressure on home prices. For all home types combined, the average year-to-date selling price through July was $718,522, up by more than 15% compared to the same 7 months in 2015. Driving the strong price growth was the single detached market segment, with a year-over-year increase of 18.7% to $950,043. At the other end of the price spectrum, condominium apartments experienced an average annual price increase of 7.8%, reflecting the tight but better supplied market segment. In recent months, the pace of year-over-year price growth has actually accelerated as market conditions have become tighter. The annual growth rate for the average detached price in the GTA was up by 21% in July, and the average condo apartment price was up by 9%. Looking forward, there's little to indicate that the relationship between supply and demand will change over the next year. As discussed earlier, borrowing costs are expected to remain very low, and there is no relief, at least on the short-term horizon, on the listings front. With this in mind, the average selling price for 2016 is expected to come in at $720,000, representing more than a 15% increase compared to the average of $622,000 in 2015. Obviously, the market segments experiencing the greatest supply shortages, singles, semis, and to a lesser extent towns, will underpin this strong rate of growth. So that covers a review and outlook for the key housing market indicators in the GTA. However, the story and outlook doesn't end there. It's no secret that the very strong rates of price growth are a concern. No one will argue that double-digit rates of price growth are not sustainable over the long term. The various levels of government in Canada are concerned about home prices and home price growth in the Greater Toronto and Vancouver areas. In British Columbia, the provincial government recently announced a foreign buyers tax which came into effect at the beginning of August. There have also been rumblings of rolling out such a tax in Ontario as well. TREB and OREA recently sent a joint letter to the Ontario Minister of Finance, Charles Sousa. In this letter, the minister was urged to be cautious when he considers options like a BC-style tax increase on foreign home buyers in Ontario. This type of tax is premature considering all levels of government lack the relevant data and information on the size and scope of foreign activity in the residential market. In the absence of more information, a tax increase like BC's could do more harm than good and initiate a range of unintended consequences for consumers and the market. While it is reasonable to argue that foreign buyers may be contributing to the overall pool of buyers in the GTA and Ontario more broadly, the demand side of the price growth equation should not be considered in a vacuum. Instead, both demand and supply issues should both be considered as contributors to the growing affordability challenge. Now, of particular importance is what could be done at the local and provincial levels to bring more supply into the marketplace. For example, reassess places to grow and the Greenbelt legislation with the goal of responsibly easing restrictions on developable land in the GTA and surrounding areas. Look at whether or not the provincial policy statement as it relates to a ready and diverse supply of housing alternatives is being enforced. Look at opportunities to redesignate lands within urban areas for low-rise housing development, and reduce or eliminate barriers to the purchase and sale of residential real estate, like the Toronto Land Transfer Tax or the Provincial Land Transfer Tax, which, as significant transaction-related costs, have acted as barriers to mobility and have thereby played a part in suppressing the number of existing homes being offered for sale. TREB will obviously be keeping a close eye on conditions in the GTA housing market and the broader housing policy debate in the second half of 2016. With that in mind, I look forward to speaking with you again soon, both in TREB's monthly Market Watch videos and our next Outlook update. Thanks very much.
Brought to you by GTA Realtors.